Hello, and welcome to Module 2, Methods to Fund Your Business. Well, we all know it costs money to start a business. Funding your business is one of the first and most important financial choices that business owners need to make. How you choose to fund your business could affect how you structure and run your business. It could make or break the condition of your business success. You could fund your business using self-funding, otherwise known as bootstrapping. Self-funding lets you leverage your own financial resources to support your business. Self-funding can come in the form of turning to a family member or friends for capital, using your savings account, or even tapping into your retirement or 401k. With self funding, you retain complete control over your business, but you also take all the risk yourself. Be careful not to spend more than you can afford, and be especially careful if you choose to tap into retirement accounts early. You might face expensive fees or penalties, or damage your ability to retire on time. So check with your plan's administrator or financial advisor before doing this. Another way to fund your business is through grant funding. The Bureau of Justice at the Department of Justice, they offer grants, huge grants, lots of money. But unfortunately, the review process is always not successful. So the question is why? The key is that when you're thinking about getting a grant, you need to remember that these grants are designed to solve a problem in the United States or abroad. A problem might be homelessness, human trafficking, or a lack of education. You must have measurables to compete for these funds. Measurables include services provided generally to marginalized populations. Tracking measurables include using the initial assessment or intake forms data, results, and reporting on those findings. Measurables need to be SMART, specific, measurable, achievable, relevant, and time bound. Grantors are looking for existing entities that demonstrate an effective model. The effectiveness is evaluated based on its impact. You must be able to explain quantitatively or with numbers how you made an impact. Always track demographics like gender, age, and ethnicity. Academic service providers, for instance, might say the number of students that they serve, the number of graduates, the number of career placements. Nonprofit service providers may track the number of clients, the number of services, the number of successful placements, things like shelter or housing in our homeless example. So, where do these grants come from? They come from philanthropic foundations. These are non governmental organizations or people that have assets, and they're provided by donors, and they're managed by a board of directors. They give funding to organizations that offer a social purpose. Names can include foundations, endowments, and so on. They include banking institution, wealthy people. Companies like Procter and Gamble, Walmart, or Target might be examples. You must research what the focus is of the monies that they're sending, or what the focus is of the grantor. Determine if your organization is a suitable organization to respond to that need, and then you need to demonstrate measurables. The key is that these types of awards can range from 5,000 to in the millions. There are government grants, foundation grants, corporate grants, and federated funds. Another way to fund your business is to seek a venture capitalist. Like I have pictures of the sharks they so graciously gave me, right? Venture capitalists are investors, like the sharks on Shark Tank. Investors can give you funding to start your business in the form of venture capital investments. Venture capital is normally offered in exchange for partial ownership and may be an active role in your company. Venture capitals typically focus on high growth companies, invest capital in return for equity rather than debt. So you're not incurring a loan. they take a higher risk in exchange for potential higher returns. They have a longer investment horizon than traditional financing. In other words, they will stay with you a little bit longer. Almost all venture capitalists will, at a minimum, want a seat on your board of directors. So be prepared to give up some portion of control and ownership of your company in exchange for this type of funding. So, how do we get venture capitalist funding? You got to find an investor, share your business plan, go through a due diligence review, work out the terms, and then the investment will come. But don't think they're going to give you $5 million and tell you to go off and do good work. No, they're going to stay with you and the money will come in rounds. It'll be like when you complete a certain task, like prepare the training material or identify employees, then some money will be paid. And then when you reach another milestone, then additional monies will be paid. The process of finding investors is a tedious process, but the key is that you need to look for someone that's reputable. And when you're going through that due diligence process, they're going to do a due diligence process on you. You need to make sure that you do just as thorough a due diligence process on them because you're giving them your business plan. And that business plan is your baby, and it encompasses some of the vital information that you've researched, learned, or had experience with. Another way to generate funds is to use crowdfunding. Crowdfunding raises funds for a business from a large number of people called crowdfunders. Crowdfunders don't receive a share of ownership in the business and don't expect a financial return on their money. Instead, they might expect a gift from your company and thanks for their contribution. Often, that gift could be the product that you're going to sell, special perks like meeting the business owner or getting their name in some type of credit or recognition. This makes crowdfunding a very popular option for people who want to produce creative works like a documentary or a physical product like a high-tech cooler. Not only do you get to retain full control of your company with this model, but if your plan fails, you're typically not under any obligation to repay the crowdfunders the money that they gave you. Commercial lending for small business loans is also a way to fund your business. If you want to retain complete control of your business but do not have enough funds to start, you may want to consider a small business loan. To increase your chances of securing a loan, you should have a business plan ready, an expense sheet, and financial projections for the next 5 years. These tools will give you an idea of how much you'll need to ask for and will help the bank or lending company know they're making a smart choice by giving you a loan. Once you have your materials ready, contact banks and credit unions to request a loan. You'll want to compare offers and get the best possible terms. These requests will likely include your personal history and any experience that you have in the industry that you're asking for funds in.